Hello and welcome to Policy and Politics with me, Tarun Nangia. Today is our budget special, and for this special show, there are a lot of expectations that the middle class India has from the government. Of course, as the prices of things are going up and the purse is pinching, everybody is looking up to Ma'am Nirmala Sitaraman for some relief. And what relief she will give to the middle class, that we will know a few days from now. We can now only conjecture that what the government is doing. Of course, our experts will have some information, but we all know that Ma'am Nirmala Sitaraman is going to give some good news this year, and we all await that good news. But let me welcome my panel today. We have with us Mr. Pramod Kumar Rai. He is chair of Indirect Tax Committee at the PhD Chambers of Commerce. We have with us Mr. Rakesh Nangia. He is chairman of Nangia Anderson India Private Limited. We have with us, after a year-long hiatus, Pallavi Dinodia Gupta. She is co-chair of the Direct Tax Committee at the PhD Chamber of Commerce. And also, she is a partner at SR Dinodia and Company. They are chartered accountants. Good to see you. At the outset, let me request Mr. Rakesh Nangia to make an opening comment. Then we go on to specific details. Over to you, Mr. Nangia.
Thank you, Tarun. We expect of the budget, they're only a month away, basically. We do see there's certain challenges where the economy is going this time. And the biggest challenge with the economy is going on, there's a slowdown in the growth of the economy. Coupled with, you have inflation, which is a challenge. And then there's other associated challenges, which are global challenges, which are looking like to ease. There's a tariff war. There's other similar issues going globally, which has a direct or indirect bearing on the budget exercises concerned. Out of all of this, there's a lot of clamor from the middle class or lower middle class people for some tax relief so that there's some additional money coming into their pocket, which boosts the private consumption. And then there's a challenge before the government. They need more money for the development. They need more money for the infrastructure spending. And then they need to give it, because of so many reasons, they need to give more money for the poor class, rural class, agriculture community, and where the money comes from. So it's a difficult situation. At the same time, the government is committed to see that I make in ease of doing business in India, ease of taxes governance in India. That's another thing which the government looks, which the public, which the businesses look at. The corporates actually, if you see there's a growth fall in this last quarter, it has gone down to 5.6%, 6%. So that's again a very big challenge. Out of the biggest challenge, if I put it there in this year, is fall in the infrastructure spending of the government. You'll be surprised that last year, there was a 30%, last year basically, not current year, previous year, there's a 30% spurt in the government spending. This year, there was only budgeted 10%. So and the way the infra money is required, the way the government has gone over those on infra, which is a pillar for the future of the country, pillar for the growth of the country is concerned. Government needs to spend money, and the private sector is not likely or is not putting the money they are required to put on the infrastructure. So everybody moves to the government spending actually. And if you see the figures, basically, if you're thinking you're going to reach to 5 trillion economy and then the 10 trillion economy after 8 years is concerned, and a Viksit Bharat is actually a tall order, actually. And the only key, I can tell you, if I name one key, is expenditure by the government, and basically a majority will be on the infrastructure. Very interesting thing. No country in the world has become developed without developing its infrastructure. And every country within the world which has developed infrastructure becomes a developed country. So this shows how important the key is important to government to pump on money on the infrastructure spending, keep on doing that. And to make an impact on the economy, there should be a 30% annual rise in infrastructure allocation. And there cannot be any other panacea. If I did the number one panacea, this is the panacea for the government to become a developed economy, and it gives a whole ecosystem of the economy. whether it is employment, whether it is a growth of GDP, whether it's a prosperity, whether it's a cost of doing business, whether it's a logistic cost, everything changes like anything. I just to give you a small example, you see what happened in the last 10 years. The national highway expansion took place by 1.6 times. India has the third largest metro infrastructure in the world. India has to make 10 airports every year, which has come to one airport a month. And this is a tall order where they're thinking for the next 20 years, they should have so many airports in the world, in the country actually. And then you see the railway network, you see the railway stations. It is totally changed and it's a visible change, and you see the changes is becoming visible now. And the changes are even going to the rural sector. So this is the biggest positive part of the country, likely to see India as a developed economy. The money will continue to happen pumping. The government will have to find resources to invest the money. There is not the resources are going to come easy, which should be non-inflationary. The resources should be non-inflation without seeing that there is not too much of burden on the taxation on the business in the country.
Thank you for that opening comment, Mr. Nangia. Now we'll go to the issue that pertains to all of middle class, lower middle class, is the issue of direct taxation. And we have Pallavi Denodia, who heads the direct tax, in a sense, department for the PhD chambers. Over to you, ma'am, for your comment on the issue that is of concern to a lot of people who watch this show.
So I think the topmost concern to most people is the salaried middle class. I think most people have opted for the new regime in this last fiscal year. And the want of the middle class is to increase the slabs, the 0 to 3, the 3 to 7, 7 to 10. I think the widening of those slabs is something that the middle class really wants. And the extension as well. So it's currently capped at 15 lakhs. So how we can move that 15 lakhs up to maybe 25 lakhs? To maybe 25 lakhs. There was a survey done that said, what is the middle class till? Until 40 lakhs, it's assumed that we are middle class. And if the middle class of India is up to 40 lakhs, then we really need to do something to move our tax regime in tandem with where we are on our surveys of who is our middle class. So therefore, we need to move our tax regime upwards from 15 lakhs to maybe 25 or even 40 lakhs and increase the net. Also increase the standard deduction, increase the ATC benefits, such that disposable income comes into the hands of the people of India and they are able to combat these inflationary pressures and see some positive benefit out of the budget. While the corporate India has seen a lot of benefit, I think the individuals, the salaried class needs to still see some more benefit.
Point well taken. In fact, a lot of people are now saying that when middle class has more money in its pocket, it will only spend. It will buy those washing machines and fridges and air conditioners and cars that will get the economy going. Because unless these people buy, the economic cycle will not kickstart.
Absolutely.
Very important point there, that more money in the hands of middle class is actually more money in the hands of businessmen. We'll go to Mr. Pramod Rai because he's co-chair of the Indirect Tax Committee at PhD Chambers. Mr. Rai, this indirect tax pinches the pockets of middle class the most because, whatever you buy, you end up paying a significant amount of tax. Any expectations you have from the budget on this account?
Yeah, definitely. I just like to continue what Ma'am Pallavi had said and Rakesh ji had said. The income tax data shows that though around more than 7 crore individuals are filing income tax returns, roughly 2.7 crores are actually paying tax. So in a population of 140 crore, this 2.7 crore tax paying individuals is a very small subset.
May I interrupt 1 second? Last 4 or 5 days in newspapers, there is a news article in almost every website that Pani Puri vendors have been getting income tax notices because the UPI amounts that they received were in excess of 40 lakhs a year.
Yes.
But since you are an ex-IRS officer, that I like to tell people who watch the show, I mean, this kind of tracking is now going on. Over to you.
Yeah. I'll come to that also. Okay. So this 2.7 crore people paying income tax is a very small subset of population, a small subset of vote bank, and that is why that is not properly addressed. Okay. We speak on news channel, TV, etc., that there should be increase in exemption limit for giving relief to middle class, but that middle class is actually 2.7 crore. But for the first time this year, the tax payment by individual taxpayers is much more compared to tax payment by corporate taxpayers. Earlier, it used to be reverse way. So this 2.7 crore is very important segment of the economy, propelling government collections. So they deserve some relief. Okay. So it is expected that this year at least that basic threshold exemption, which is in new tax regime at 3 lakhs, will be made at least 5 lakhs. Because those who have got income up to 5 lakhs, 7 lakhs, they are not paying any tax. But those who are in the higher tax brackets, for them it is only income up to 3 lakhs which is exempt. So that basic exemption limit has to be increased. Now coming to indirect taxes, indirectly each and every person in the country is paying indirect tax. Even beggars are paying that tax. So whatever we buy, and the people who are having low income, actually they end up paying more indirect taxes. In a way, whatever they earn, they spend everything. So a higher share of their earnings are spent on indirect taxes. So if government gives relief in this segment, that will be a real relief to everybody in the country. Because direct taxes relief is limited to those 2.7 crores. Now, what government can do? One, the rate rationalization. See, at times government becomes greedy because they want more money. Today, a product like cement that attracts 28% GST, which is the rate for luxury goods. So cement cannot be termed as a luxury item from any perspective. It's goes in capital creation, asset building, etc. Item of necessity for poor people. So that 28% tax on cement is not justified. So there are a number of products where rate rationalization is needed. For the manufacturing segment, the raw materials should attract lower tax, and the finished product should attract higher tax. That will encourage manufacturing. If raw material attracts lower taxes from custom duty perspective also, then the import will be easier of raw material. And if value-added products are attracting higher taxes, then the value-added product will not get imported in that quantity. So that will give boost to domestic manufacturing and employment creation and whatnot. Today, a number of products are covered under FTA, free trade agreements. So when you import those products, they attract zero customs duty on their import. But if the same item is manufactured in India, the incidence of taxes are not zero, because the raw material for that manufacturing is attracting higher tax. So government needs to review all those items which are covered under this preferential trade agreements FTA, so that the incidence of tax when those items are manufactured in India is not more than incidence of tax on imports. If not better, give us at least at par treatment. So these are the areas where rates can be rejigged, rationalization and this taking care of FTA part, etc. More than that, see, today government cannot reduce cost of the raw material. They cannot increase selling price of finished product to make any industry viable. The role of the government is twofold. One, which Mr. Rakesh has emphasized, you have to invest a lot of money in infra building, because if infra is good, a lot of things will happen. And second is regulatory aspects. We keep on shouting ease of doing business as a slogan. But a long way to go to achieve ease of doing business. Look at our litigation policy. The actual litigation is by government agencies. Are they going for a responsible litigation? In customs, in GST, whenever there is a dispute, a heading which attracts higher tax, that is correct according to them without any analysis. They issue show cause notice. Nobody is bothered about looking at merits of the case. Blindly they confirm. If you win at some level, they say, okay, higher revenue is involved, we'll not look at the merit, we'll file appeal in Supreme Court, High Court, etc. So government is biggest litigator. See, we are doing business. We want early resolution of the dispute. Can you do a business when dispute is going to be resolved in 20 years? How you can have your cost projections and revenue projections? So the officers who are passing orders, who are raising demands, what is the accountability at their part? There is an officer, let us say, he issues 100 demands, and each of his demands are set aside by higher court. The conclusion is clear that he is a bad officer. He has not taken correct decision. What is the harm caused to that officer? No harm. He will be promoted out of turn. There will be no vigilance case against him. So there needs to be accountability in implementation of tax laws, government decisions, and a lot more things. So if we achieve ease of doing business, if government has got a responsible litigation policy, accountability with the decision makers, automatically the cost of business will go down and our competitiveness will go up, and we'll be able to compete in global world, and that will be a way towards becoming a developed country. Two things are very important: accountability, elimination of corruption, ease of doing business, and a good infra. Whatever country is least developed, undeveloped, they are plagued with these two problems: lot of corruption and poor infra. So government has to work on those aspects. Thank
In
you.
fact, you made two important points which a lot of people relate with, that items which are raw materials imported for exporting finished products, when that's taxed, then we can't export because our products become very expensive. Secondly, a lot of middle class people, I mean MSMEs, sorry, they were asked that why they buy China imports. They said domestic products are expensive as compared to the landed cost of China's goods is cheaper, despite paying for cargo, is still cheaper. So that is a big issue, that why Indians can't buy Indian stuff. So you raised that point. Second, before I go to Mr. Rakesh Tangia,
I'll correct a little bit. See, when it comes to export, we do have a policy. Exports are zero rated.
yes,
Zero rated means on export, you don't have to pay any duty. Plus, whatever raw material and services are consumed in production of export goods, all the taxes are refunded to you. There are various schemes.
does this need clarity? Because for sectors like aluminum production, this may not be happening.
No. The scheme is for every sector.
Okay.
Every sector. The problem is, again, that ease of doing. There is a scheme, you claim that benefit, you may not be granted. Some procedural violation, there will be a dispute. Then there are schemes like road tax, okay? Refund of embedded taxes, etc. So they have notified a rate, but the road tax rates are not reflective of actual incidence of taxes. So that's
Point.
But the bigger issue is, like I told about FTA. You import an item under FTA for consumption in India. And when the same item is manufactured by someone in India, so on import, you are not collecting any tax.
The zero rated duty for
So for example, solar panels, prior to 2022, solar panels were imported with zero tax. When you are manufacturing solar panel in India, for that you require aluminum. So there is a tax incidence on aluminum. Then there is a paste, silver paste, there was a tax incidence. Glass, there was a tax incidence. So when you manufacture panel in India, there is a tax incidence. So Indian manufactured panels were not able to compete with imported panels.
Point very well taken.
Now the situation has changed, and then there is a boom in solar panel.
Thanks for your intervention. Almost out of time. So we'll go to Mr. Rakesh Nangia for his input on the income tax review. Any expectations on that?
Tarun, income tax review, the last year the government initiated steps, and they took a lot of bold steps in making a review the Income Tax Act. Let me tell you, very important, there will be not a new act, that will be only a review of the act. So please, be very careful. The government has made the intention very clear that there will be no new act is concerned. Now, what are historically the clauses which have become redundant, the clauses which are bottlenecks, the clauses where the cases have been decided by Supreme Court either way, they're infractions, basically. They need to be removed. There should be ease of doing business is concerned from the income tax point of view is concerned. That is something very important. And I tell you, there was a very important statement which was made by FM basically in the last budget. And the steps that the step they took it basically to see that the act should be easy, should be concise, should be precise, easy to understand, with least litigation coming out of it, which just Mr. Rai mentioned. The litigation, and Pallavi also mentioned, is a key challenge which is there. So the government will going to make a leaner act. There'll be not so many provisions, sub-provisions, schedules, subsections, which makes the humongous act. There have been so many litigation cycles which have been brought to the act, which have become which are of no use to anybody, but except it's a pain, it will get to misuse. Those have to be removed out of it. So it will be hygiene act. It will come for the public comment. As per what FM said in the last budget, it is likely to come it can come anytime. Actually, you find that this is likely to come there. So you'll find the new income tax review should be a much more leaner, cleaner, easy to understand. Hopefully litigated.
Point well taken. I go to Ma'am Pallavi Dinodia on here. Income tax review, of course. Second, infrastructure spending. Any expectations that you have, and how it will help kickstart the economy?
So I think I'll go back to Rakesh sir's original comment that any developed economy needs growth in infrastructure, and the government is the primary key stakeholder in spending on infrastructure. So definitely I expect an increase in government spending in infrastructure. I also expect incentivization of private players, and seeing how government and private players can come together to better the infrastructure where the government can't get to, the private players can probably get there. So seeing how government will incentivize private players to also spend on infrastructure. CSR, for example, is one of those key things that the government has done by creating a partnership in creating social change and in incentivizing and encouraging corporates to be responsible and do social change by spending at least 2% of their profits each year. So similar things need to be done, I think, in the infrastructure space, both on the private as well as on the government side. And definitely, I think increase in infrastructure will give us that impetus, because it does generate, it gives lots of employment, it generates manpower, it generates employment, industries, etc. So definitely key expectation as far as I'm concerned.
Thank you for that input. We are out of time, but it was a good short show on the budget expectation, and looking forward to see you on our next show where we'll discuss specific sectors in detail. Mostly now after the budget also we'll do some shows on what did we get and what more to expect in the coming financial year, which is a crucial year. There's a new government that's taking over in the United States of America. The oath, I think, is 4 days from now. There will be discussions on trade agreements, and so on and so forth. Of course, the Indo-UK trade agreement is also under discussion. So a lot of action on the financial side in the coming year with related to how much duties we, in a sense, enforce on imports and what concessions we are ready to give. So it will be an interesting year, and look forward to the budget. I'd like to thank Ma'am Pallavi Dinodia, Mr. Rakesh Nangia, Mr. Pramod Rai for making time and sharing all these insights with our viewers. Thank you so very much for joining.
Thank you.
Thank you for having us. Thank you.